The McDonald's stock has got quite a few investors hot under the collar, with a lot of people talking about the potential growth in the stock up ahead. So in this video, we're going to answer the question on everybody's mind, and that is, should you currently be buying into the McDonald's stock? Well, to help answer this question, we're going to take a look at some of the news items driving the pricing at the moment. We're also going to go and take a deep look at the financials and help you guys make sense of the company and the stock. And hopefully at the end of this video, you'll be able to make an informed decision as to whether or not you should include or should not include McDonald's into your personal stock portfolio. Before we get into it, if you can just very quickly click that like button to help support this channel, we really would appreciate it. And if this is your first time here and you haven't subscribed, consider clicking the subscribe button down below. So just quickly looking at the historical pricing on the stock, we can see if we go and zoom out to the last year, we see that the stock is up 16.63%, year to date 20.25%, and if we go on the last month, the stock is up 4.35%. And some of the bigger price movements happening over the last 5 days, with the stock down currently 0.05% and then pushing up in the last day. Now the big thing on everybody's lips at the moment is growth. A lot of investors talking about the potential growth at McDonald's. And of course, the big thing driving that, if we're coming down to some of the news items, we can see that people are talking about the increased traffic growth that's now back at McDonald's restaurants. This is, of course, on the back of vaccination rates being increased. This is also, of course, on the fact that a lot of countries around the world are starting to open up trade a little bit as things seem to be settling down a little bit with the pandemic. There is, of course, also the big elephant in the room, which everybody's talking about around the McDonald's stock, and that is the fact that the margins at McDonald's are some of the highest in the industry. And a lot of investors are saying, well, McDonald's looks like a solid bet. Long term, this has to be the right time to buy in. And in fact, just looking at a recent article that came out from Forbes, they're talking about the Q3 results. Now, when we look at stocks, we don't just look at one quarter, because as I always say here on this channel, one quarter doesn't make a business, and we really focus in on the trailing 12 months versus the previous 2 years. However, that being said, in Q3, they've reported a 12% year-on-year growth in terms of international revenue. They are also very, very aggressively targeting international licensing as part of their revenue stream. So it's quite an interesting thing playing out in terms of McDonald's revenue. And I think the thing that we just have to lean back on here, and something that we have to be very aware of, is the fact that we are moving into, I wouldn't say post-pandemic, but we're sort of towards the tail end of this thing, hopefully. And of course, a lot more revenue is starting to flow into businesses like McDonald's. So it's very easy to get excited about these kind of growth factors, but I think it is always important to have a look at where the business is standing financially before you make that decision. So to do that, we're going to jump in and take a look at the stock sheet. We're going to take a look at some of the fundamentals behind their financials and really help you guys make sense of where the business is currently at. So just very quickly looking at the volatility in the stock, we can see it's actually not done too bad over the pandemic. 257 on the high side, 202 on the low side over the 52 weeks. And when we come down to our overview, we can see 187 billion on the valuation. This is, of course, by market cap. If we look at that 10-year price sitting at 92.10, currently trading at the 250 level. And this is with a P ratio of 25.84 and a very healthy profit margin of 32.33%. Very surprisingly, though, even with such healthy margins, they have negative net equity, and that, for me, is the big issue I'm seeing on the cards at the moment. However, that being said, they are managing free cash flows very well, so possibly that's going to change quite drastically now as we head into this post-pandemic era. So looking at that equity to market cap, it's in the red at negative 4.18%. Dividend yield currently sitting at 2.06 with expected increases on the cards, and they have a payout ratio of 58%. And even after that pretty big dividend payout, they still have positive free cash flow of 2.796 billion. Now, coming down to the key ratios, we can see debt to equity is a bit out of whack, and that is, of course, because of the negative equity. Free cash flow to debt is pretty low, 11%. So essentially what that means is they can pretty much, out of free cash flow, cover 11% of their debt position. Price to sell is sitting at 8.35. There is no current book price to book, and the 5-year beta exceptionally low, sitting at 0.58. There is currently an insider holding of 0.05%, and institutional holding sitting at 69%. There is currently only 0.76% of all shares short, and this is with a short ratio of 2.08. Now, this brings us down to the year-on-years, and this is pretty much the part that I get excited about. This is something I always talk about here on the channel. I like to value the business separately to the actual stock, because for me, I like to buy businesses. I like to buy cash flow rather than merely looking at the stock and the stock price and a lot of the factors that move the stock price, which is often sentiment based and analyst projection based. So when we come down and we have a look at these year on years, there's a couple of interesting things going on. First of all, when we look at the number of shares outstanding, they have been very consistent over the last 3 years. So there's been no major dilution, so that's a really good thing. On the negative side, ideally we would like to have seen them buy back some of those shares, especially at the lower pricing levels. It would have made a lot of sense, and it would have made sense for them to really use some debt finance structuring to really buy back some of those shares if they had a lot of positive sentiment from within the company. I wouldn't say that this is a negative thing, but I would definitely focus a little bit on the fact that there haven't been buybacks, and I would expect that this is something that they would have taken an opportunity to do, especially during what has been traditionally some of the lowest finance cost for money available in the history of business. Now, coming back down and just having a look at these total assets, we can see they've gone up quite considerably, 32 billion to 52 billion. This, of course, is in the last 3-year period, and it's been pretty consistent that they've been doing that. However, liabilities have been increasing pretty drastically as well, and if we have a look at this total equity, they've been in the red on total equity consistently now for the last 3 years. So that's a big area of concern for me. Total revenues on the top line side, they're actually not doing too bad. They've gone from 21 to 21, fell back a little bit obviously at the start of the pandemic, and they managed to pick that up again. And a lot of people talking about the fact that there is potentially a lot of growth up ahead as sort of the restaurant trade and foot traffic moves back to more normality. However, if we come down to the gross profits, we can see that pretty much the same picture. Operating income, pretty much the same picture. And in fact, if we look at the net incomes, operating cash flow and free cash flow, this is the bottom line net revenue. I'm actually pretty impressed with how McDonald's is doing exceptionally well. And we can see in terms of margins, I mean, top line revenue of 22 and bottom line revenue of 7.283. They're doing an exceptional job on net margin. And one would expect that they would start putting some of this free cash flow to actually building their equity base. So I hope that is something we're going to see. Personally, that's something I'm going to keep a very close eye on in the ratios up ahead. And of course, this brings us to our 12-point fundamental checklist. So this is essentially a checklist that we use to look for both growth and momentum